Investor Stories, GEICO. Warren Buffett is one of the greatest investors of our times. His sage advice to the investing community was, "Be fearful when others are greedy and greedy when others are fearful." If almost everyone is giving you stock tips, it may be a good signal to exit. The investing legend in fact walks the talk. He has used this value investing philosophy to grow his wealth multifold over the years. One of his greatest successes where he used this philosophy was at GEICO. GEICO originally stood for Government Employees Insurance Company. It had a unique business model. They sold policies directly to customers without agents. Their target segment was high-quality drivers, like professors and government bureaucrats. They didn't have to pay agent commissions and had a fantastic target segment. Hence, they reduced their cost to sell. Thus, they could sell their policies at a huge discount and still earn a fantastic profit margin. After understanding the business model, Warren Buffett put half his net worth into GEICO stock. It made a 50% return in just 1 year. Warren Buffett sold it and invested in another cheaper company. That was, however, a mistake. Over the next 20 years, GEICO stock increased by 100x. Warren Buffett later advised, "Don't sell your stake in an identifiably wonderful company." 25 years later, another opportunity arose. GEICO had shifted their business model from insuring high-quality drivers to more risky drivers. They relaxed the company's premium to surplus ratio, so they had less buffers to accommodate risk. As a result, they suffered substantial losses. In 1976, GEICO was almost bankrupt. Investors wouldn't touch the GEICO stock, they were fearful. Knowing that the value advantage was still intact, what would you have done even when the market proclaimed that it was close to bankruptcy? Buy or sell? Warren Buffett purchased $4.1 million of GEICO common shares and $20 million of convertible preferred stock. Warren Buffett still believed in the company's intrinsic value. He was on the board of directors and helped recruit Jack Byrne as CEO. Jack Byrne took emergency course corrections to improve the profitability. The new CEO optimized costs. He exited unprofitable markets and segments. He raised premiums. It worked. The next year, GEICO profitability was restored. By 1977, Warren Buffett had secured a 150% gain on his common stock and a 200% gain on his preferred stock. Over the next 4 years, Warren Buffett invested $45.7 million in total to own 1/3 of the company. Through 1980s, GEICO improved profitability, grew and did share buybacks. As a result of the share buybacks, Warren Buffett's ownership stake increased from 33% to 50%. In 1995, Warren Buffett purchased the remaining approximately 50% stock at $2.3 billion. As a result, Warren Buffett's initial investment of $45.7 million grew to $2.4 billion. This is an amazing 5,000% plus gain in 15 years, which translates to 30% CAGR starting from 1980s. So, do you truly understand the intrinsic value of the business and why the business is a good investment? If you know the why, then you will be less perturbed by the emotional waves of greed and fear. And that makes all the difference. So invest wisely. If you found this video helpful, please hit the like button and subscribe. Your encouragement will motivate us to create more helpful videos going forward.